Welcome to our YouTube channel, Moneyline with Nancy TV. This is where you get the latest updates on business, finance, economy, market, as well as investment information. If you couldn't follow us live on television, please do subscribe to our YouTube channel. Also, press the notification bell so that you can get notifications. Thank you. Enjoy this video. All right, let's quickly take Mr. Johnson Chukwu right away. Okay, we'll take Mr. Chukwu in just a few seconds. Let's take a look. Oh, is Mr. Chukwu there already? Okay, Mr. Chukwu, good morning and welcome to the program. Okay.
Good morning. Happy New Year and thank you for having me.
Happy New Year. Let's take a look at your bio first before I come back to you. Okay. Okay, Mr. Chukwu, can I see you now?
Yes, right. I can see you.
Okay, let's get started. 2025, Happy New Year, of course, to you, to everyone. We've been saying that in the last couple of days. What goodies do you think that 2025 will bring to us as Nigerians? What economic goodies?
Well, let me start from saying that in terms of goodies, I expect that the economic growth rate will improve beyond the projected 3.2% average this year. Recall that the GDP grew at 2.98%, 3.17%, 3.19%, and then 3.46% in the first 3 quarters of last year. So if you aggregate that, we're around the region of 3.19 or so. So I think the GDP will end this year at about 3.2% growth. So we expect that, last year, we expect this year's growth will improve, coming from a number of factors. We're going to see improved crude oil production, even if it's marginal, with the conclusion of separate acquisition of mobile oil fields. We should expect that will come on stream along the year. We should see some production coming from those shut-in wells. Then we should also expect some improvement in agricultural production. I believe the government will push back to some extent, to a reasonable extent, the issues of bandits in the northeast and particularly in the northwest. That should lead to some level of improvement in agricultural production. But it is some level of improvement in security around the north central zones. The conflict between the settlers and herders have to some extent improved. So we should expect food production from the north central. So in any case, we should expect improvement in agricultural production. But beyond that, in terms of household income will remain under pressure in the new year, in this year, because inflation rate will still be above 25%. And with inflation at 25%, for those who are fixed income earners, who are salaried employees, and those who are surviving on rent, unless they increase their salaries and rent increases, they benefit from rent increases, we do expect that the increase in average cost of goods and services will be higher than the increase in household income. So household living standard will still come under pressure. But overall, if you look at the macroeconomic environment, we are going to see some improvement. But at the household level, particularly for those in paid employment who are salaried, or those who are living on fixed income, without a commensurate increase in their income, their household standard of living will still come under pressure. But the economy will still show some recoveries, but household income on average may not witness material improvement.
For you, Mr. Chukwu, let's take a look at the macro metrics this year. The 2024 macro economic environment, of course, was a bit challenged, even though this administration still thinks that, we closed even on a good scale, as it were. What will be your assessment for macro metrics this year? You're optimistic that GDP will be in the range of 3% when you spoke earlier. Food production would be better, but how can that impact other macro metrics? How will that impact on employment, even though that the NBS says that unemployment figure stands as 4.3% according to the new methodology and all of that? You're smiling. Nobody wants to hear that 4.3%.
Well, I hope the DG of Nigerian Bureau of Statistics is fully aware that that adjustment in methodology has made nonsense of the unemployment figure in the country. That nobody ever makes reference to it as a parameter to measure level of employment. So they have to look at that and calibrate it. But back to your question, I believe that if we have an improved crude oil production, we're going to see some level of stability in the exchange rates as we move towards the year, and possibly some level of appreciation of exchange rates. That will bring some calming effect on inflation figure. I did say earlier that inflation will remain relatively above 20%, in the region of 25, 27% this year. If you look at what will happen globally, we think oil prices will moderate because with the advent of, with the assumption of office by Donald Trump on 20th of January, we expect that his policies as it relates to non-recognition of climate change issues, not believing in that the fossil fuel is depleting the ozone layer, he will likely going to support and encourage improved crude production from hydraulic fracturing in the US, and also push to dismantle OPEC Plus alliance. So that will lead to material improvement in crude production. But Nigeria, to what extent Nigeria will benefit from that? Because when you see an improvement in crude production, you're going to see a reduction in crude prices, and that will impact positively on the pump price of fuel across the country, which will help moderate the impact of higher inflation rates on the households. So we should expect fuel prices to reduce. So in effect, for the HNIs, for those in the A and B categories of the income structure, they may see some relief in their household expenditure. But on average, an average household has spoken extensively on that, we should still see pressures on standard of living because of inflation rates higher than the increase in income.
You're saying inflation at about 25, 27%. Aren't you optimistic, so optimistic as the president was in his budget proposal speech in December, that inflation at 15%? And what are you basing that 27% on, bearing in mind that the MBS says it would rebase its GDP and CPI figures? The CPI figures will be recalibrated, and the base year will be 2024. So where are you getting the 27% from when we are currently even at 34%? Inflation numbers are due today anyway for December.
Okay, Nancy, bear in mind, bear in mind that the inflation figure is based on a cumulative base. What I mean by cumulative base, the inflation figure for this year will be based on the figures as at last year, be measuring the increase in prices from what they were as at the same period last year. So the factor that will drive inflation include the expected increase in telecommunication tariff. Bear in mind that the telecommunication service cut across almost all facets of our current engagement. Data services, banks, once the tariffs are increased, the banks are going to increase their charges, their electronic payment charges. All the fintech operators are going to increase their charges. So that will have direct impact on average consumer prices. Then in addition to that, I did mention that we're going to see improvement in food production, but it's not going to be material enough or strong enough as to lead to a very significant reduction in food prices. But bear in mind that the food inflation as at November was 39.93%. And we are going to move into the harvest season. I mean, the planting season. As we're moving into the planting season, the average subsistence farmer would have completely sold off his produce and would be going through a farming season. So you're going to see further increase in the short time, in the immediate time, in food prices. Of course, when we get to harvest season, which is when the impact of any improvement in food production will manifest, you will see some moderation. So, and then if you look at that, the other aspects, exchange rate, I said, may stabilize, but even if it stabilizes at in the region of 1,600, that will not lead to a material relief in terms of core inflation. So the factor that will drive inflation, one, expected increase in tariffs on telecommunication services, and that is going to be very pervasive. And then, like I said, the food inflation is still remaining obstinate this year until we recover all areas of the country's territory under bandits control or under Boko Haram control, and will completely eliminate the strife, the conflict between the herders and the settlers in the north central of the country.
You're optimistic that we'll see good agricultural production this year, harvest and all of that. We were also optimistic like this sometime last year, from the third quarter to the fourth quarter, that okay, there will be good harvest and inflation will come down. Yet we did not see it. Remember that I think there was an emergency response plan committee or so that was set up by the president to be able to stem food prices. Nothing really changed drastically as a result of that. So I'm wondering where this optimism on food production, because even though our farmers produce, not many of them, majority of them are off farms now. So what's driving that your optimism that, you know, because if like saying as we did for 2024, we'll carry over, you know, this year as it were.
Okay, Nancy, look at what I'm saying in effect is that you are going to see a pushback. I mean, if you look at the national budget, a lot of funding have been earmarked for security. So assuming that is disbursed and then we get value for money, then we should expect food, particularly in North Central. I think that's a low-hanging fruit. It's easier to resolve the conflicts in the North Central zone, and then people in Benue, Plateau, Kaduna will go back to their farms.
But Mr. Chukwu, sorry to cut you short. Security also had a chunk of big votes last year too. Even during Buhari's time. I know it's not Buhari now, but at least from 2024, which was Tinubu's first budget.
You know, I also added a caveat to it,
Yes.
assuming we get value.
Value for money ahead.
So it's not just the amount that is voted. One is necessary we voted a reasonable amount, but it's also, most importantly, that we deploy that money in the most appropriate and most effective manner. So assuming those things are done, of course, everything we are saying here is based on some basic assumptions, which you always say, all things being equal. We are talking if we are dealing with a rational person and we think everybody is, economic agents are rational. So these are the irreducible minimum that we should expect them to do. But bear in mind that when I say food inflation, we're going to see inflation drop from about 34.6% to about 25, 27%. Bear in mind that we're talking about already a high base. And it's always good to emphasize this. If we are saying that inflation is going to be about 25% next year, it then means if you take, for instance, a bag of rice, what we're saying in effect that a bag of rice that's currently selling at 100 naira will sell at 125 naira next year. We're not saying the bag of rice that's selling at 100 naira will sell at 75 naira next year, because the misconception and when you say inflation is going to drop, people think the prices are going to reverse. That is what we call this deflation. We are not expecting deflation. Rather, we expect this inflation, increase in prices at a lower rate than the previous year. So that's why I also say that households whose income do not catch up with rate of inflation may still suffer a diminution in their standard of living. If, for instance, a household currently pays 100,000 naira for a bag of rice, and we are saying that inflation will be at 25% next year, so that means they should be ready to pay 125 naira per bag of rice. And if their income does not increase by 25 naira or 25%, then they can no longer afford a full bag of rice next year. So that's when I say that inflation is going to moderate. It's not that inflation is, we're going to have a deflation, the price levels are going to drop. It's just that they're going to increase at a rate that's lower than the rate that we increased last year.
Okay, like I mentioned earlier, December inflation is due out today, hopefully. I don't know if we'll get it. We can't get it from the website of the MBS like before. So, but what's your bet if released or when released? What's your bet from a 34% in November? And bearing in mind that there was a dirty December, will that impact?
Yeah, Nancy, you know that the MBS said they are going to, they are rebasing the GDP and inflation figures. So I believe the figure they will announce today will be based on the rebased figures. So, but if a back of the envelope observers information is anything to go by, we should expect a further uptick in the inflation figure. But I had sounded a caution earlier that whatever the basing that is done must ensure that we do not come up with a figure that we no longer use for economic decision making, like we now deal with inflation figure. I mean, we deal with unemployment figure. So I hope that NBS we're going to come up. So it's actually difficult to hazard a guess now until I see the details of the rebasing that they're going to come up with. But we have a SOA test when it relates to unemployment figure. That none of us is using it to make decisions or advise the government, or even the government using it to advise itself on what to do. So, so let's wait until we have the figures from MBS, and then we will interrogate it, and hopefully it will reflect a broader articulation of or analysis of our economic variables, and it will enhance decision making.
Let's see, because I know that the MBS did say that they would release at least the rebased figure by the end of January. So I don't know if the December inflation will be the rebased figure yet. But just like you said, assuming it's not, they don't use the rebased figure, what do you think the figure would be? Now, let me situate my question as against President's 15% inflation target for this year. And that means that for where we were in November at 34%, for us to get to a 15%, that means we need to enter a disinflation mode, you know, from January, let's exclude December, with everything and all the spendings that went on. So that means we need to enter a disinflation mode. At what rate do you think that disinflation mode will be coming at? I know this is a very technical and hard question. I'm thinking so now as I'm asking it, but attempt to answer.
Okay, I don't think the economy will ever get to a disinflation situation. Okay, yeah, we can go into a disinflation, yes.
Yes.
But when it will happen,
Not
it will
deflation.
happen. If it will happen, because two factors are going to make it possible. One is the base effect. We're already dealing with the high base. We're already seeing highly elevated prices. So increments above the current levels will not be so huge, particularly because consumer purchasing power have been eroded. I'll give you an instance. If you look at the Q3 GDP figures, you observe that trade sector grew by only 0.69%. The manufacturing sector grew about 0.9%. So which means there's very low demand. So further increases in price are difficult to transfer to consumers. And therefore, it will be difficult for the average businesses to increase their prices further. And that's why we're going to deal with this inflation in the current year. But be that as it may, you will still have factors, like I mentioned earlier, increase in telecommunications that will drive up prices that are going to be prices that will happen on us, and that they are not, some of them are not discretionary expenditure today, because you really can't avoid using telecommunication services. You can't avoid using power supply. You can't avoid fuel consumption. You can't avoid food consumption. So these are factors we have to contend with. But because of very weak consumer purchasing power, prices are going to rise, but at a slower pace than they did last year.
Let's talk about the global economy a little bit, because we are not isolated. President Trump will be inaugurated as the 47th president, if I'm not mistaken. Is it 47th now? Yes. Of the United States.
Yeah, the 47th
yes,
president.
47th. He was the 45th. Now he's going to be 47th on Monday. Where do you think it will leave the global economy? Because everything that we've heard from President-elect Trump was about tariffs. And we know that tariffs are inflationary, are inherently inflationary. Now, if we take a look at the biggest trading partners of Nigeria, for example, China, India. China, of course, is on top of the list. President Trump wants to, heap tariffs on everybody, tariffable, as it stands. Where does it leave us? Because if the United States engages with other bigger economies in this trade war, as it were, do you think that the repercussion will come on developing countries such as ours? That cost that would have been lost, I hope you understand what I mean, Chief Chukwu.
Absolutely.
Yes, that cost that would have been lost, they will now heap it on every other trading partner. And Nigeria is, a big trading partner to most of these Asian and Western economies worldwide.
Nancy, I think it concerns actually deeper than the U.S. imposing tariffs on Chinese and the other countries. In case they impose tariff, the tariff will be specific to U.S. export to U.S. economy. So that will not necessarily lead to them transferring those costs to other consumers of their exports. So I think that wouldn't be a great concern to me. But the greatest concern is that the U.S. President, Donald Trump, is likely going to disrupt the world order, starting from the tariffs he has spoken about, which will completely be at variance with the World Trade Organization's objective to have a global economy that focuses on what you call a comparative advantage, where countries focus on their areas of comparative advantage. And then that will lead to increase in production of goods and services and lower costs and improve global living standards. That's Trump's position will completely run contrary to that. But beyond that, Trump is also triggering global tensions. He had said he's going to take over Greenland by force or by economic sanctions. He has talked about imposing new tariffs on Mexico, on Canada, and on China. Bear in mind that Canada is one of the closest allies to the U.S. So if he's beginning to threaten his own greatest allies, and the country has a buffer for any attack on the U.S. Homeland, then that will give you an indication of where Trump could head to.
Mr.
Trump
Chukwu,
has said he's going to do.
sorry to cut you short. How about the threat of another global inflation? Because global inflation cooled down in 2024. With all of this that will come up, don't you think that there will be a trigger for global inflation again, which would also affect us?
Yeah, what could trigger global inflation is not just the tariff. It is the policy indication that by Trump that is going to reduce taxes, household taxes as well as corporate taxes. And if he does that, then because bear in mind that U.S. fiscal framework is actually in huge deficit. That means the U.S. deficit will balloon. If that happens, then the U.S. will print more dollar to fund it, as well as sell instrument at higher yield to fund that deficit. I mean, security instrument at higher yield. But the cheapest route that Trump would go to is to ask the legislature to increase the limit on borrowing and therefore ways and means funding of the budget. If that happens, they're going to inject a dollar liquidity into the economy that will have the impact of inflationary pressures across the globe. So I think that's a fact that tries staring us in the face. But there are too many unknowns on the outcome of the very volatile policy indications of the Trump administration that will become effective from 28th of January.
Let's talk about the central bank and the MPR. The MPR outlook for this year, what do you think? The MPC meeting that was supposed to be in January has been postponed to February 17th. We're supposed to have a January MPC meeting 27th and 28th of this month. The CBN's MPC meeting has now been moved to February. Do you still think that we're going to see a very hawkish central bank this year? Bearing in mind that the Tinubu administration has a 15% inflation target, that's one. Then number two, what kind of room would the CBN need to support the growth profile of the country this year?
Well, the central bank governor has made his policy direction very clear, and he said that as long as inflation pressure subsists, they will continue to tighten. So, and I said earlier, the inflation rate is going to subsist, though at a slower rate because of the base effect, and then possibly improvements in food production as well as food production. So, if he remains faithful to his statements, then we should expect that the tightening, the era of tight monetary policy will subsist in the current year. Maybe not at the same magnitude that it was last year. At that 27.5% NPR rate, there is limit to what extent the increase about 875 basis points last year. I don't think there's a headroom for them to increase by that magnitude this year, but we should expect a largely tight monetary policy environment in the current fiscal framework, the current fiscal year. In terms of what contribution can they make, they have to now begin to deploy the Green Finance Initiative to support agricultural production, to
No, but
support the manufacturing.
Cardoso is anti-development initiative. He mentioned it
Yeah,
categorically clear.
yeah, but they are gradually revising that position. I think the reality on the ground is that it's inevitable that some sectors of the economy require some level of stimulus, given the level of interest rate environment.
Let's talk about your own line of business, private, wealth business. Where do you think that investors made a lot of returns last year? That's one. Then number two, what do you think is that big investment this year? Let me open my ears to get some kind of advice
Okay,
free this
okay,
morning.
that's it. Interestingly, in the next few minutes, I'll be broadcasting to the world on our economic outlook. I'm sure you're invited. I guess you will join us.
Yes,
We'll
I
be
was
having a
invited.
Cowry, yes, Cowry economic outlook. So I think, and I'm giving you a tip of what will come in by 12 noon this afternoon. I believe in terms of where people made money this year, you saw the equity market gained 37.65% last year. We saw yield on fixed income instruments, even treasury bills, in the region of 23%, 22.5%, effective yield of over 26%. In terms of what asset class actually outperformed the inflation, the only asset class that actually outperformed the inflation this year was equity instruments, where you had, like I said earlier, 37.65%. Bear in mind that inflation was about 34.6% last year. So where will investors go to? I think the equity space will still remain attractive. In the past 5 years, we have seen consistent capital market gain over the past 5 years. In 2020 was about 50% gain. 2023 was about 45.9% gain. And last year, 37.565% gain. So I think the equity space will remain strong. People will invest in Euro bonds to protect themselves against Naira fluctuations. Those opportunities, including retail bonds, where we do pop breaking, will be there. People will invest in fixed income instruments, particularly treasury bills, with yield in that region of 25, 26% for those who are risk averse, who do not want to take risk. So these, I think, are the areas for portfolio investors to take positions in.
Any valuation risk, any depreciation risk this year that I should take note of, since you are nudging us towards equities market? Because the equities market is up and down now,
Yes, there are some stock that we think may be having overvalued, but I don't think it would be appropriate to begin to mention them, so that they don't think them and the marketing them here. But there are some stocks that if you reach out to us, we can tell you these ones we consider as overvalued. There are some stock that we correct, but overall market indicates that the market will see a strong growth in 2025.
Anything for bonds market this year? Treasury bills we saw was on fire last year. Do you see that again this year? The savings bonds of the federal government is open again from Monday till Friday. 5,000 naira minimum to invest, 50 million naira maximum to invest. Any interest there? I think about 17% or so for this month.
Yes, for very small retail investors, it still remain attractive. But for discerning investor, there are instruments that give much better yields, that also have shorter maturities.
Okay. I think, Mr. Chukwu, I need to let you go now so that you have a few more minutes to take water, take a breather, go through your scripts again, as you'll be speaking to the world at 12 noon, what your outlook is. So you've given us a tip of the iceberg here. So I'll see you again next time. So do have a fantastic day and say me hi to your people in Cowry.
Thank you for having me.
All right.
Happy New Year once again.
Yeah.
Hi, Chief Nas.
Chief Chukwu, Happy New Year. All right. I've been speaking with Johnson Chukwu, who is the GMD and Chief Executive Officer of Cowry Asset Management, and we've been looking at 2025 economic. Thank you for watching. In case this is your first time watching us, thank you. Don't subscribe to the channel. drop your comments as well as like, and most of all, share our content.